You know, there is literally a ticking time bomb sitting quietly in your filing cabinet right this very second. It's an oversight so incredibly common, yet so totally devastating, that it could easily cost you $10,000, maybe even more, the next time disaster strikes. And the truly terrifying part, you probably have absolutely no idea you're making this mistake right now. Let's dive into this explainer and figure out what's really going on.
So, $10,000. That's the average price tag of the blind faith millions of policyholders place in their insurance companies every single day. I mean, we all just walk around with total peace of mind assuming our insurer is this guaranteed safety net that's just going to unconditionally protect us, right? But by just making those assumptions, people are essentially setting fire to their own money, completely unaware of a massive financial oversight happening right under their noses.
But what happens when disaster finally strikes? When the smoke clears or the waters recede, reality hits hard. I mean, incredibly hard. Instead of a swift rescue, desperate people file their claims only to sit there and watch in horror as those claims get aggressively reduced, endlessly delayed, or just outright denied. Suddenly, that safety net we all trust feels suspiciously like a trap. So why exactly does this happen?
Well, the biggest trap is the assumption of blanket coverage. People mistakenly believe that just paying their monthly premium acts as this impenetrable shield, that simply because you pay on time, your claims are automatically going to get approved. We assume the insurance company will kindly sit down and explain every intricate detail of their dense, complicated contract to us. But spoiler alert, that is simply not how the system works.
See, your policy is not a blank check. It's really more like a maze of conditional logic. Insurers use 4 silent levers to strictly control payouts. We're talking hidden exclusions for specific events, crippling deductibles, totally unforgiving conditions of claim, and strict sublimits on exactly how much they'll actually pay for your valuables. These 4 factors drastically dictate the exact payout you'll actually see, if you even see one at all.
So, you have to ask yourself, are you falling into this catastrophic trap right now? Are you completely unaware of your own policy's rigid limits? To really understand how easily this happens, let's walk through a real-world scenario of a typical homeowner who honestly thought they were totally safe.
Imagine this. You wake up at 3 a.m. to the horrible sound of rushing water. A pipe right behind the washing machine just ruptured. In minutes, your entire first floor is completely submerged. It's destroying antique furniture, soaking the drywall, totally ruining family heirlooms. It's an absolutely traumatic experience. But amidst all that chaos, the family thinks, well, at least we have insurance. So the contractors arrive, they assess the devastation, and the repair bill comes out to a staggering $15,000. It is a massive hit, but the family confidently files their claim. They hand over that waterlogged invoice, fully expecting to be saved by the exact policy they've been paying into for years. They're literally just waiting for that $15,000 check to show up in the mail. But here is exactly where expectation meets a very harsh reality. The claim is heavily scrutinized, and the payout gets slashed to just a fraction of the cost. Why? Well, because while the burst pipe itself might be covered, the resulting damage triggered specific exclusions. Maybe they had an actual cash value policy that pays just pennies on the dollar for their ruined, depreciated furniture rather than the full replacement cost. Or actually worse, what if the water damage came from a sewer backup? That is a peril entirely excluded without a specialized rider.
I know, it's a staggering financial blow, but hold on, because that's not even the worst part. You see, this kind of devastation doesn't just happen because of broad exclusions, it actually happens because of several other highly specific, really costly traps secretly lurking in the fine print of your paperwork, traps that are easily triggered if you just aren't actively paying attention. A lot of these financial disasters usually stem from entirely preventable human errors. It often starts with just ignoring renewal documents, where insurers legally and kind of silently change your coverage terms, or maybe never taking the time to review what actually isn't covered. But it's really the first 2 points, delaying a report and poor documentation, where people truly inadvertently sabotage their own financial rescue.
Let's take the threat of delay for a second. In the insurance industry, waiting too long to report a claim triggers a really critical clause called failure to mitigate. Say you wait a week to report a leak and black mold spreads rapidly through those damp walls. Well, the insurer will just argue your hesitation actually caused the secondary damage. And boom, that hands them an incredibly easy, legally binding excuse to just flat out deny the claim.
And without rigorous documentation, you are virtually powerless. Missing photos, missing receipts, missing records, all of this actively weakens your claim. You can't just present an adjuster with a stripped-down, ruined room and expect a check. The burden of proof is entirely on you to definitively prove that a pristine $3,000 sofa was actually sitting there. You literally have to prove your loss, not just claim it.
Right about now, you might be sitting there feeling super frustrated, just wondering how on earth this is even allowed to happen. Why does the house always seem to win in these tragic scenarios? Why does the whole system feel like it's explicitly designed to protect corporate profits instead of your family's home?
Well, the harsh reality is that insurance policies are strictly legal agreements, contracts of adhesion, written entirely by the insurer. An insurance company's only true responsibility is to follow the exact mathematical terms of that specific document. It's not to offer sympathy for your tragic loss. They operate purely on cold logic and strict legality, not human emotion. Because they follow that contract to the absolute letter. Anything that falls even a tiny millimeter outside those strict coverage lines equals a severely reduced payout, or worse, a total, devastating denial. If your specific tragedy doesn't perfectly match their highly specific definition of a covered event, they are completely legally protected in withholding your money.
Okay, I know it sounds pretty grim, but you are definitely not powerless here. Actively understanding your policy is literally the single greatest defense you have. So how do you actually escape this ticking time bomb before it blows up in your face? Let's go through exactly how you defuse the trap and secure your financial protection.
First off, you really don't need a law degree to defend yourself from financial ruin. Simple, proactive preparation is the absolute only way to definitively prevent these incredibly expensive and devastating surprises. You essentially have to fundamentally shift your mindset. You have to move from just assuming you are covered to genuinely knowing for a fact that you are covered.
So here is your survival guide. It requires 4 really straightforward steps. Number 1, review your policy annually to catch any of those sneaky coverage changes we talked about. Number 2, intimately know your exact coverage limits and deductibles. 3, maintain meticulous photographic records and receipts of all your valuables. And finally, number 4, if disaster ever does strike, document the damages immediately and always ask clarifying questions before you officially file a claim.
Honestly, securing your financial future really is that simple. The whole $10,000 mistake, it isn't usually the result of some grand, complex fraud. It's simply the everyday tragedy of misunderstanding your own coverage, coasting on assumptions, and then only discovering the harsh reality when you are already facing a major, life-altering loss. Look, reading an insurance policy might be a fantastic cure for insomnia, but skipping it, that's what causes the real nightmares.
It ultimately boils down to this. Taking just a few minutes to understand your policy today could easily save you tens of thousands tomorrow. Sacrificing just a tiny bit of your time right now to sit down and read the fine print is the ultimate, undeniable key to preventing a total financial wipeout later on. It is quite literally the single highest return investment of your time you will ever make.
So please don't wait for a disaster to be your teacher. Take action right now to avoid the trap. If the insights in this explainer helped you spot some of those hidden traps in your own paperwork, make sure to subscribe to NexClaim for more vital financial protection strategies. And seriously, share this with your friends and family today before they end up facing a catastrophic loss of their own.
Now, I really want to hear from you guys. Have you ever experienced a sudden denial or a totally devastating surprise during an insurance claim? Jump into the comments below and share your hard-fought victories or tragedies so we can all kind of learn from each other's survival stories. Until next time, stay safe, stay protected, and we'll see you in the next explainer.